Looking at the market today, we have it up near record highs. Both the US and the Aussie are still pushing higher. The individual companies within it, the breadth is quite narrow. So we're looking to understand, well, how do these leaders perform? What are they looking like? Are there any alarm bells? And at the same time, if there are alarm bells, are there other trading opportunities? And Gary Glover's highlighted a fair few in previous reports, and we're showing some that have started to break out right now. So a good report to delve into. The man who's done the research is Gary Glover from Novus Capital. Good morning, Gary. How are you?
Well, good, Chris. Self?
Well, it's a nice day in Sydney. Sky's blue, wind isn't too strong, surf was good, but we're looking at the markets and we're seeing the indices are back up near these highs. So for those who haven't seen some of the previous videos of the last couple of weeks, Gary's talked on the expansion points going back from GFC lows as well. What that is just looking at sort of recent high, recent low, calculating that range in points, and then adding it to the high once it broke out. So now that I've given a little summary on the resistance levels, what's happening up here on the NASDAQ and how important is it to us as investors and traders?
Yeah, I mean, look, we've hit that $20,000 wall here, so we've flirted with it a few times there. We're still we're basically still sort of hanging tight here. So the thing that I noticed was that we did have a little, after having that little rally there, I think up into the 24th of January, the last little spike there did pull back in sort of three waves, didn't sort of follow through the downside, and then has bounced again to then put another lower high as well. So the whole thing's sort of tightening up here, under the high here. I have noticed there in the last couple of sessions there, we have gone above a lower high, but we're still yet to take out the high, I guess that makes sense. So we still haven't taken out the 24th of January high as well. So it's, it's tightening up in here, or congesting under the high. So, it sounds funny. That normally does favor a bit of a break. When you do sort of spend a bit of time congesting under the high, that does, suggest a bit of a break up, out, most of the time. But we're still we've just got a big technical zone here. And I know sort of looking at these 50-year sort of patterns, as well as the post-election years as well, as that they can be pretty choppy, pretty messy, and got a history of these broadening patterns of just sort of going to a slightly higher, then pulling back and slightly higher. So just a really messy sort of first quarter sort of setup, and that and considering the market is reasonably extended here, so I think the 20,000 is under threat here, even though we are sort of slightly above it there. We still haven't taken out the high. I think the high was on the 16th of December. Might have been 20,204 or 205, something like that. So, it's still staying under there. But, so look, I don't know. I think it's actually still showing resistance there. I think the other indices are sort of similar. We're up near the highs as well, but nothing out of the ordinary here. Just pretty choppy here. It's just, there's our sort of, I thought I'd break it up into the daily there so you can see exactly what I'm talking about. So had a rally, pull back in three waves, and then tried to rally here. It hasn't really, it's been constructive there, but it hasn't really sort of powered on here. So, just got to be careful of these. Oftentimes when you see this sort of dull rally like this, they can just expand slightly higher and then pull back slightly lower. So I'm just wary of that. It sounds bizarre here. I'd say probably something like 7 out of the 10 sort of 50-year cycles there. We just saw that messy, choppy, volatile first quarter. It was just it's kind of a odd sort of setup there, but it's just something which does happen there. And it is obviously, we have had some pretty decent gains normally coming into the 50 years. So oftentimes you'll have run for a couple of years into this period, so it just might be the fact that even though things still look reasonably constructive out there, just because we had some big gains, it's going to take a little while to sort of build up a second head of steam. So that's why I've always sort of favored this sort of congesting here and having a pullback. Nothing big there, but just more of a sideways sort of expansion there. But look, so far we still keep seeing rotation, Chris, which is still healthy as well. So definitely seeing, even reporting season here, closer to home there, we're seeing a few stocks take a bit of a hit. Some big shooting star patterns. So sort of companies reporting and then shooting up kind of aggressively. So,
Well,
yeah.
we want to look at those in detail because you've got some great charts below, which really have me questioning how sustainable is that. But before that rotation is critical. It was definitely something you've looked at before, and we'll delve in those charts. Just to stick with the indices though, but the fifth year, we'll put a link up on the screen here so that anyone wants to go into that detail to understand that report. But as you talk about that rotation in the Aussie, as you're talking about that shooting star for the narrow breadth that we have, how does that impact the indices for the Aussie?
Well, we're sort of just, similar to sort of, those sort of 50 years in the past there. This is a classic expansion there, sort of from that late year, it sort of pulled back and then expanded to 100% of the range and expanded back down to a new low, now expanded to a new high there. So the whole thing has been expanding here. So that's sort of something that does occur within our index quite a bit, but something which occurs a lot more often in this sort of cycle, kind of where we sit at the moment. So that's why I was sort of thinking, I still think you're probably going to be a bit choppy here. Can't see any big pullbacks there, Chris, but I can see just a choppy sort of consolidation period here, just because that's sort of something which definitely happens in that sort of, in that first quarter. The strange thing with the cycle, Chris, is we don't really see any weakness in the first quarter. That's normally actually a danger sign for maybe the second quarter, or a bit further, so it's probably healthier to see some sort of more sort of sidewaysy sort of, or a tight consolidation of sort here. So we actually do want to see a little bit of,
Pause.
Yeah, a little bit of a pause here is just a better setup. Otherwise, I think most of the markets, it didn't have that sort of pause there.
But later.
But yeah, something comes in later, just a bit of a, just a bit of a shock there. So that might come in post sort of April, May or something like that, So but look, at this stage there, still, I think the market still looks sort of constructive there, but I think it's going to be pretty choppy here. I think sort of seeing that, kind of reporting season. So the main thing there is if the market can kind of keep rotating here, having a few stocks have a bit of a sell down, and the index can sort of hold off, and another sector can kind of pick up the slack here. So you've seen materials sort of, show a little bit here. Things like property trusts have sort of, a few other sort of, I noticed yesterday all the payment stocks were up just on the one day. So, it's healthy to see hopefully see some sectors that have been weak sort of step up. And then even last week we saw some of the stocks that have been languishing. As well. So I've seen, things like Endeavour and Ramsay have been sort of struggling, even sort of Spark and stuff there. And some of those stocks were all sort of showing a bit of strength end of last week. So again, that's another sign of rotation. So that's actually what we want to see. So that is actually healthy for the market. So we want to see some sectors sell off here after having some big gains, and then some other new sectors sort of step up here. So it's healthy to see that type of move.
Well, not quite on the sectors just yet, but the Dow Jones is obviously different to the NASDAQ in the sense of where the exposures are and where sort of which parts of the economy are really being driven by those indices are being driven by. Still, it is right up there near those expansion levels. We're toying with that 200% expansion, which is what you've talked about before. We've broken the third ascending trend line, which you've highlighted these blue trend lines. So we're on the underside of it and trying to get back over it, which is kind of a confluence with that 200% expansion point. It's just not getting through. So we've got the rotation happening possibly at the lower levels. Just on these indices, the last US one we're going to look at, the Dow Jones. Are you seeing sort of similar things in the NASDAQ and the S&P or anything?
Yeah, so it has had that three accelerating trend lines there. It's sort of broken below that, and now gone back up for a retest of that zone. So back up to retest the previous high as well. So that's a big resistance level. That kind of so really the bigger picture suggest that we should fade here or sort of pull back from here. But, if you drill into the daily there, Chris, we're actually seeing, again, a nice little VCP tightening pattern on that, on the Dow. So it's actually had a bit of a pullback, rally, pullback, tighten. So there's a tightening setup here. So, when I see those tightening patterns just underneath the old high, they got a history of actually breaking up here. So, so when that sort of tight congestion there under the high does actually favor a bit of an upside break here. So, bigger picture's telling us we should, have some sort of little congestion pullback here. Our cycle's telling us we should have that, but price action so far is sort of actually showing a bit more strength there. So we're not sort of seeing the signs of weakness there. We're sort of seeing, we're just seeing more of that rotation, which is kind of the healthier signs there. So not, we've seen a couple of distribution days here, but not a follow through, I guess. So, so now I guess, at this stage, still looks sort of somewhat constructive there. So until we sort of get a break below that, I think I'll be watching that Dow actually pretty closely there, just because there is a nice little tight VCP in there. So once we break a swing high or a swing low, that might be the one that gives us a bit of a lead here.
Well, it did lead earlier parts or other parts of 2024 and definitely gave a kick along.
Yeah.
The interesting part that I've seen in this week's report is that you have been talking about looking for that rotation in the market. You've also been talking about trying to see these ones trawling the bottom and indications that they have actually started to turn. And through your studies of the model books, which we'll put a link on for anyone who wants to study them in depth, is how to find those market leaders and what do they look like when they actually start to break out. I've found it really interesting where you're putting Fletcher and a few other ones in there, because here we've seen it's broken out over that sort of downward trend line just recently. That's not the straightest trend line I've drawn, but you've drawn it in the charts. It's broken out above it. It's come back. The volume is not huge, which sort of leads me to a question is, it seems like we might have had some sort of capitulation days throughout this period.
Yeah.
As it started to turn up, your study of the model books, do we need to have the volume really early, or it's ideal but not imperative?
Yes, you've had two things there. You've had an exhaustion of the sellers there into that low, so volume sort of spiked there. Also saw an equity raise too. So that caused a period of sort of higher volume as well. Just seeing, because obviously it's done the, classic rights issue, near the low, paid down the debt. It's often sort of these things happen at the worst times there for the stock here. That's why I've sort of been, putting a little bit of this into sort of portfolios here, but with a view that, it's going to take a little bit of time here, Chris, as well. So the one thing we do know is we do want to sort of see these stocks sort of, find a low, build a bit of a base, have like maybe 1, 2 or 3 higher lows. Oftentimes we see a bit of a basing sort of pattern before we get going. So, for those in a rush, you can be patient there. You want to sort of, you really want to sort of wait for that sort of, second or third higher low before you start to sort of look at these here. So me personally, I really like to see that 0, 1, 2, 3 pattern. So see 3 higher lows establish themselves. So we just got all the characters there. But I think the volume is constructive there, but we do know that they don't always sort of start with that big volume as well. So, you've really just, that sort of, all those big volumes sort of change your hands. Just people just sort of giving up at the lows. And then you can sort of see more normal, sort of healthier volumes there. So it'll be just watching how this trades relative there. So we've had a bit of a pop out of the range here now. Ideally it might pull back. I still think this might come back to around 270, still on top of the previous high there, and that'll be, constructive there. So probably seeing some lighter volume pullback to that rally will be interesting. But it's sort of one that I think is pretty interesting now. I do think this one's got potential ups. This has got, I think, a large amount of upside potential here. And I think everyone's underestimating sort of having those higher rates in New Zealand for a long time. They really put the skids on their economy. So those rates are coming off here now. Just starting to see some of the New Zealand companies just start to show a little bit of improvement there, just with that 125 basis points of cuts already sort of flowing through. So just putting a bit more money into everyone's hands there. And I think that'll be we could even see more cuts there as well. But I think that just takes a while. Those interest rate cuts and, both ways, you don't see it move the needle straight away. It normally takes sort of 6 to 9 months before you start to see any effects of that. So, but I think this looks pretty constructive there. It's definitely one that I'm going to try and build a position here.
Well, you've talked about the recovery, the cycle, and the construction cycle before. We've got a couple to look at in this week's report. What is the John Lyng Group? And looking a little bit further, when we scroll down into this chart, we can see yesterday dropped off and fell dramatically. Now, we know that they do help, think from the insurer's perspective, to rebuild after catastrophes. In this reporting season, we've seen the insurers report that they have had favourable climatic conditions that have helped bolster their returns. We are still in a period of higher inflation, higher interest rates and earnings on their premium pools. It was highest in 13 years, just because where we are in the cycle. So that's been in the insurers' earnings. But if there aren't many calamities and disasters from a natural disasters perspective, does that flow through to the earnings for JLG and sort of the outlook? And is that an impact on them?
I would. I think it, obviously more floods and things like that, more work of it going on there. That's definitely a factor there. They have been sort of accumulating other businesses as well, and they have got a US presence as well, which is just taking a little while to come through there. So, the risk I see here is it's been a really strong growth story in Australia. It's whether they can roll out, have the same type of growth in the US market there. So, we've seen quite a few Aussie companies not quite be able to match the success here domestically overseas. So that's the risk there. But, if this company can have half the success they had overseas that they've had in Australia here, then it's probably got a lot of upside, in the stock here. So, so I think it's a pretty good segment there as well. Pretty well. I think probably half of us have probably had some exposure to John Lyng personally as well. Just any flood damage or any housing issues insurance wise, they're always coming out there. So so I think the price action looks pretty interesting there. Looks good, classic exhaustion, a low there. It's had a nice rally out of that low and then pull back in a three-wave manner and stayed pretty tight. And the volume has dried up there. So just started to sort of break out of that little consolidation there last week, Chris. So I think it's gone up a little bit further here. So does look all right there, I think. Does report next week. That's probably a little bit of risk there with the reporting there. But price action does look sort of constructive.
Nice. Well, the next one in your list, going into rural funds. So still no exposure. You've talked about soft commodities. We've discussed it a fair few times that getting a pure play in the soft commodities is a much harder task than, say, a silver, tin, copper, gold, etc. So soft commodities are harder to get exposure on the ASX, I should say. You've got some downtrends here. So these are quite concerning, massive downtrends, sort of escalating volume and then sort of trolling out. Maybe it is a 0, 1, 2, didn't quite get the 3 and then fell back down into another stage down. But the volumes were just climbing to where they are now. So that's a bit of a scary chart. What is it that's caught your eye to sort of pique at your interest and add it to a list to watch?
Yeah, two things there. Obviously, like the false break was sort of, gone through to a new low. And I think we only sort of spent, 3 weeks there. Didn't really follow through and then reversed pretty hard last week and big volume bars the last 2 weeks off that reversal low and pushing above as well. And then if you zoom out the last probably 6 weeks there as well, the volumes have definitely been elevated here. So possible signs of accumulation occurring down here. And one thing we are seeing commodity prices be pretty buoyant around the globe, particularly yeah. So just this could be it could be sort of positive for retail funds there. So I think it looks pretty interesting there. It's just the the sector's sort of quite positive there. It's it's funny that rural funds is really sort of almost in financial space. And the financials have been pretty robust there, but while it hasn't really been robust, so it's kind of probably followed more the ag stock sort of lower here. So, but yeah, I think it's definitely one that looks pretty interesting here at the moment. So price action is sort of showing that false break and signs of accumulation there. So we has had a nice volume, nice bounce out of this low so far, Chris, as well. So probably about watching maybe a sort of consolidation out of here. So yeah, not one that I've added to yet, just get a bit of risk there, but I do like the price action here at the moment. I think it looks very constructive.
Okay, well, the company that you talk about, John Lyng, and a lot of us may have had exposure to that company and a different type of commodity, but many do consider it a valuable commodity of what they sell at Endeavour Group. So a lot of us have seen their storefronts and been in there. This chart, well, can we say it's a false break? You've got a weekly chart. You're talking about the number of weeks in rural funds being under the previous low. This is a lot of time down here. So
yeah, we can't call this one a false break in because we've gone quite a bit deeper and gone to a new low there. Just started to sort of see a few of these sort of names that have been hit pretty hard sort of turn up here, up a low here. So we do have, we've got basically we've got two high lows here on the daily there. So we're just starting to see, I think we're seeing three sort of higher highs as well in there. So just starting to see, positive construction there, possible change of character on the daily setup, probably not so much on the weekly here yet, but yeah. So it is starting to look constructive on the daily here, but what I'm trying to highlight here is really need to see it get above that old low, so you really want to see it, really close above that sort of 480, 490 zone there. That, if we can get above there, then the stock's got a chance of moving, quite a bit higher there. But yeah, we've still got a pretty strong downtrend here so far. That'll be the key here in the medium term as to whether we can overcome that last swing low. But yeah, the daily's looking sort of constructive. But as I say, just notice quite a few of these stocks that have been they've been suppressed here for a while, been in strong downtrends. There, quite a few of these sort of older names are sort of turning up here. So, seeing some money come out of sort of growth, maybe looking for a little bit of value here at the moment. So definitely sort of, there's definitely sort of appears to be a little bit of a shift in that area.
well, we're looking at ones that have trolling out a bottom, quite scary charts, particularly for momentum traders and for those who look for those long monster mega stock returns. But if we fast forward sort of a company that's had a downtrend like we've got Endeavour on chart here, fast forward, say 6 months to something that has successfully trolled out a bit of a bottom and looking quite positive, maybe not the 12-month RSI, but, well, yeah, this one is actually on the 12-month RSI and the quarterly. What's caught your eye here? How is this important? And sort of particularly looking from the perspective of, okay, it's maybe going through a low there. We've clearly had heavy selling into this. It went through a fair bit of pain, bit of volume. And what part of this chart sort of helps tell its story?
Yeah, I mean, obviously it's been sort of trending up here for, close to sort of 15 months here now, maybe a bit longer there. But, the one thing we've seen so far, Chris, is we haven't seen any large pullbacks. So they've all been sort of pretty tight here, pretty mild here. So pullbacks have all been pretty small, and have been corrective in nature there. So it just means that we haven't seen anything impulsive there. It's been more of a sort of sideways sort of consolidation, and then we've sort of broken up here. So moving, a lot more freely, sort of moving upwards, and then sort of consolidating sideways there. So again, we're in another big sort of consolidation pattern here. And just sort of starting to poke its head out there. I thought there a week or two ago that was actually going to kick on and go to a new high, but did sort of pull back into the range again. Still sort of kept, still built another higher low here. So a little bit messier than you'd like there, but so far the trend still looks pretty constructive there.
Nice. Well, that's solid movement. And hopefully, yeah, we can see that, because I know that studying the market leaders, the model books, these congestions, these coils, once they've had sort of a successful rally and so 100% return, well, that's a great precursor before, say, another $1 or $2 run. Getting ahead of myself there. Looking at the next part of the report, you've talked about that resurgence in residential properties. We've had sort of the higher interest rates. They look like they may be coming down. We're looking ahead for future earnings. We're looking at sort of federal government talking about more stimulus, while they're well and truly off the number of houses that they really talked about hitting for this financial year, they're well and truly off it on the monthly score. That's still positive from building houses. So what's Growthpoint doing to catch your eye, and what's the key thing that you're going to be looking for with Growthpoint?
Yeah, I just saw quite a few of the property trusts pop up in the last couple of weeks. We saw them hit the launch pad there a couple of weeks ago, but seen like Dexus and Charter Hall have some decent moves. Yeah, I saw GPT pop out of the range there during the week as well. So just I was looking for sort of stocks that have been probably trying to build a bit of a base here, maybe get a higher low or two, and maybe coming out of sort of consolidation period there. So highlight a couple in the last couple of weeks there, but GOZ's another one, just started to sort of break out of this consolidation zone. And yeah, just constructive there, because we've sort of got, we've sort of got that larger basing sort of pattern as well, Chris, as well. So we've got really get a nice sort of washout low. We've sort of built like a little bit of a three-wave decline, get another high low, bit of an impulsive rally, another consolidation, another higher low. So just kind of building quite nicely here. Sort of a stronger base there. The one thing we're seeing, obviously all these productivity reports are sort of a little bit negative there. And we're already seeing, there's a shift there, basically sort of, organizations are pulling staff back into the office there, back into the cities. And so we're just definitely seeing people, moving back towards the into these sort of office spaces again. So that's probably going to be a positive for the property trusts here longer term.
That's a good thing to see on the chart side of things. If we can see that follow through, like you've said before, we've seen it on the launch pad, so that can be positive. Moving gears into something that has been in the far corner, the top right of the chart, we've been these leading gold miners. It's been something that you've talked about a fair bit, and this has got me to the exciting part of the report, where I really love to see you break down sort of whether there's more legs in it or how treacherous it can be to trade there, and what you'll be looking for as sort of warning bells if you are actually delving in these parts of the market. So EVN, gold miner, solid return, coming from $2 lows 2 years ago to coming up towards 650, 630s. So what's happening here?
Yeah, lots happening here, Chris. I mean, if you look at the volume just in detail, look at that volume for the last 9 weeks. It's pitiful. It's really we rallied up 4 weeks there. We had very, very light volume. We had 1 week down. The volume was surpassed the 4 weeks. It was probably almost the total of the 4 weeks up. Then we rallied another 3 weeks as well, and the volume's getting pretty light. Really, the only volume week was kind of the week of the high as well. So just got a really low volume participation rally here after a bit of a congestion as well, which is kind of like a bit of a fourth wave. And so, so just, if you look at like a lot of tops and stuff there, they'll have that, these strong trends, they'll have, they'll build, then they'll have a period of congestion. And the last leg up is often that sort of fifth wave, classic low volume, low participation there, and then you mark a top there. So the things you're looking for is it hitting near an old resistance level? Yes, it is. Is this sort of like, oftentimes the last leg up can be that 3-month leg as well. So do we have like is the last pullback around 13 weeks ago from the low, and would go up, in a pretty strong manner. And again, quite a few of these stocks are showing those exact, characteristics here. So we just got a lot of the classic sort of setup here for an important low. So I'm not saying this, look, maybe we'll do a cup and handle or something on gold here, because I don't know. Maybe we'll pull back here and form a handle, and then maybe this can go up longer term there. But yeah, interesting here. I mean, like, people have got different theories on sort of gold here, but from my experience, gold normally runs with equity markets. It doesn't run against them, or people sort of say it's a hedge, but I'm not sure that's the case. Even the inflation hedge as well. the only thing I will say about gold is that it does tend to do better when there's global conflict. So when there's war breaks out, when there's tension in regions there that could be sort of dangerous zones for the world, so that can be negative there. So look, if Trump comes in here and can actually calm the Middle East down, can calm the Ukraine-Russia conflict, that might actually slow down some of the conflict or maybe reduce it potentially. It could go the other way, Chris. Maybe initially he's able to ease it off here, but then maybe it goes the other way later on. But all I know is that the price action there is not. It's a little risky here. If I just seeing very low participation in this little what's the last leg here. So just seeing a few danger signs there. So if I was long gold here, I'd be tightening myself right up here. I think there's there's signs here, maybe potential short there. But I know these things. If you look at that last top there, took a while. So we might be up here for a while. So we might get a topping pattern for or consolidation or something. All I'm saying, I just don't like the sort of technical pattern there is telling is just it's yelling out to me this is high risk here right now. It's got all the classic signs of a topping pattern. So just saying be careful. That's all I'm saying.
Very much so. Qantas, well, this has been a solid mover. So 2024 sort of getting there. Took a while to get to its highs and then did crack eventually a 52-week high, which we know from your model books, massively important. So rally, sideways congestion, cracks a 52-week high, moderate congestion, runs again, moderate congestion pops up. This seems to be a little bit different, this movement, than the last few rallies that it had. So what's happening here?
So basically it's double the price, Chris. So that, we're what, 475 sort of low in October and we're gone to 950 here. So we're, with that complete, that's pretty rare for a stock like this to double in price there. What's that, 18-month period there? So pretty impressive rally there. Just last thing I was seeing on the chart there, we've had that really, really strong rally, but now we're starting to overlap. So if we drill into the daily there, we're sort of seeing the topping sort of, we're seeing a pullback, go near high, pullback below the last low, so the whole thing is sort of overlapping there. So it's just starting to lose a little bit of its strength there. But before that, the trend was pretty strong. Each pullback was sitting on top or even leaving space. But now we're starting to see overlap there. And if you sort of you draw in this sort of daily there, we are sort of starting to see what they call like an ending diagonal pattern. And this is often how these sort of, these stronger stocks can actually end, is with that ending diagonal. They eventually break down out of that diagonal pattern. So look, there's still Qantas still got the buyback going on. So that's sort of supportive of higher prices there. But I think we are getting to the end of that. So there's still a little bit more to go. But yeah, just with that doubling in price, their overlapping nature, less volume here, just some caution here as well. I think the stock's looking vulnerable for a pullback.
Right. Well, JB Hi-Fi, if you're talking about doubling in price, well, it's done a touch more. Depends on where you look at the low, but it has had a longer time frame to sort of build up that base and then shoot out. Once again, you're getting over the 52-week high and then it kicks into gear as it's quite a volatile. If we look at this one from a percentage range, that's a pretty big percentage movement over sort of 6 months before then breaking out and getting on to it again. The next consolidation really tight, sort of the ones that you talk about are really constructive when you've got momentum leaders. And then almost like Qantas, it sort of has been seen to getting a little bit more volatile, less direct in its movement. And then what's going on there?
Yeah, so we've got that sort of big shooting sort of star sort of pattern there. So oftentimes when you sort of see a trend but really, really strong, you'll have that big wide range exhaustion pattern there. So it's a bit like you often see that at the low sometimes, Chris, as well. It being running down, just that capitulation of the low. So it's like a capitulation of your sellers there. So this is almost like in reverse there, capitulation of your buyers there, and then you finally see we've finally seen some sellers step in and sell this stock down. So that's a big spinning top there, big wide range, big volume as well. So that's just, again, another sign of distribution taking place and a bit of a warning sign as well. So look, the stock's up, had a tremendous run here. I don't know what the multiple is, but I think the multiple is really, it might maybe 80 or 90 or something. It's something, or maybe it's not that high, but it's at least about 30, 40% higher than normal. So, yeah, it's trading on, very expensive here at the moment there. So I think there's some risk here. Yeah, so just, you just don't know, it's a great company there, but that's definitely signs of distribution starting to take place here after a pretty strong rally here. So just a few concerns there.
Right. Well, another one that's had a stellar chart, but gapped up. Now, chicken, duck, swan, I don't know. We're probably not going to get into that in great detail, but it's sort of similar themes. Trawled out its bottom, it's broken up its high, got through the 52-week high, and then just kept on going. It seemed like it was really coming up into maybe like a VCP in itself or an upper triangle, which used to be bad, could be good depending on the construction within it, and then bang. So is that good or bad to see it pop up that much on earnings?
Yeah, look, it's look, if you get a gap and then it runs and stuff there, then it can be good there. Can be, like another episodic pivot sort of style there. But you're always got to be careful when they run pretty high and they're looking a bit vertical like they are. So can be sort of exhaustion there. So again, we're sort of gapped up here, big shooting star there. I mean, the one thing you'll see in the last 5 days here, Chris, is big volume. So, sort of selling into that heat there. So that, again, that's just not, again, if you look back technically and look for these sort of strong trends there, and then you sort of see these big shooting stars there, they do have a habit. They don't come in the middle of those things. They often sort of come at the very end here. So they can just be sort of topping exhaustion patterns as well. So just gotta be careful there. It's a sign of distribution taking place here. We're definitely seeing some reasonable selling coming in here right now.
The last chart, which is super exciting to look at because just how it ramps up, it's like it's just building and building speed. It just sort of keeps gaining. And the red line, which is the 50-week moving average, which is almost like a year in itself, that's just climbing. The volume, well, it's hard to see, but it's kind of things like it's just coming down a bit thinner, like you said before. But we do have these periods of sort of high volume and coinciding with sort of tops and down days. So don't want to steal your thunder, but what's happening here?
Yeah, similar setup, Chris. Just get them out again, we're kind of reporting into these, big wide range days up. So kind of oftentimes you sort of can run here. Sort of it's, buy the rumor, sell the news sometimes. So they can gap up and exhaustion and then draw the sellers in at the end of these moves. So seeing that big wide range, big sort of shooting star sort of setup again. So we can go back and look at these things historically there. That sort of, after we've had a really strong trend there, we see this type of price action there that can sort of be, can mark a lot of the tops, see a lot of highs there. And look, to be honest, I'm not too surprised there was Suncorp and IAG both having, I thought they reported soundly, but, these things have had great runs here. They're trading on really high multiples. So the results are okay, pretty solid there. And people say, oh yeah, maybe the dividend could have been better there. But the one thing we've got going on this week, potentially, Chris, is we're likely to see a rate cut. Now, one of the reasons why these insurers have done so well is that, with interest rates being quite high, it means that any premiums paid are earning, good money on a higher rate, sitting in cash there. That's how insurance companies make the money. So if rates are going to come down here and just a little bit of a cut there, that's going to impact profitability, and the market tends to move before these events as well here. So no surprise to me to see some of these insurers come off here. So, I've warned a few of my clients there that, the pendulum's about to shift here for these. I don't know. I don't expect to see too many cuts here, but just the fact that we're going to see a cut, maybe a second cut, who knows? I doubt whether we'll see a second one too quickly, but just that shift there will be enough. Will be a slight negative for these insurers as well. So Yeah, so yeah, I think it's yeah, again, just a bit of a warning sign here. We're just seeing a lot of these sort of stocks been running for the last couple of years, showing these big shooting star, big reversals there, big volume, some sort of selling coming in. So starting to see signs of sort of selling amongst some of the strongest names there. So we do need to see some other names step forward. So we are seeing some of those laggards step forward here. So we need to see that continue, Chris. As these sort of stocks maybe cool off here, we should be seeing a new sector or a new breed start to move higher here.
But definitely we want to look for that rotation, and something you've talked about a lot and a lot of research. So you've touched on a fair few things like the model books, 100% rallies. There's a whole playlist we've created, and we'll put a link at the very end of this video here. If anyone wants to go through that research that Gary's presented previously and just really touch up on, well, what type of pattern is that and what's the format that he looks for, the blueprint. So with those insights, not only today, but that whole plethora of depth of research and interviews that you've shared before, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.